Imagine an ETF that just doesn't buy all 500 companies in the S&P 500, but instead it picks the fastest runners, the companies with the strongest forward momentum. That is the idea behind the SPMO ETF, and we're going to be breaking it down with the Invesco S&P 500 Momentum ETF. But how exactly does the SPMO work, and how does it compare to two very popular ETFs, the VOO or that Vanguard S&P 500 and the QQQ, which tracks that NASDAQ 100? Today, I'm going to break it down. We're going to look at the performance, going to look at the risk, the fees, the sector exposure, and more importantly, the pros and cons for everyday investors just like you and I. Now, by the end of the video, you're going to know exactly how this ETF stacks up versus the competition. So what is the SPMO? This is the Invesco S&P 500 Momentum ETF. Very simple job, tracks the S&P 500 Momentum Index. So instead of investing into all 500 companies in the S&P 500, it holds about 95 to 100 stocks. And based on their momentum score, basically how strongly their stock price has been trending upward, every 6 months, this fund is going to automatically rebalance, tossing out those weaker stocks, bringing in new ones, which are going to have that momentum. That means the lineup will change every 6 months based in this ETF. Now, the expense ratio, 0.13, which is a little bit more than we see with the VOO, but it is definitely less than we see with that QQQ. And very similar to our tech ETFs, top 5 holdings are NVIDIA. We have Meta in there, Amazon, Broadcom, and Tesla. So yes, it's tilted towards those bigger tech companies. But unlike the QQQ, it does include financials and consumer discretionary stocks, which can be those high performers or those momentum funds. So ever since this launch in 2015, so we have 10 years of data. This is something that is very important. Now, we know that historical data does not prove anything in the future, but since the inception, again, thinking about 10 years, it has been an 18.4% per year return, which is crazy. VOO is running at 14.4, and the QQQ is at 19.5 with the very big run with tech. Now, in 2024 alone, the SPMO gained 45% with the Momentum Fund, which is kind of crazy. The VOO was at 25, QQQM was at 26, but here's the catch. It does have volatility, but it might not be as much volatility as you think, with the concentration in about 100 stocks, very similar to, again, what we see with like a QQQ, but not quite as many as the 500 in the VOO during the 2020 pandemic. So when COVID happened, the SPMO fell 31%. But when you put the volatility in comparison, the VOO was down 34%. The QQQ was down 35%. So even though the downside risk is real, it was not as worse off as we've seen with some of the other ETFs out there, which is kind of crazy. So now I want to hop over and kind of look at a comparison of these ETFs from a different kind of view. So let's go ahead and load this up. Here we're comparing the VOO, the SPMO, and the QQQ, which again are 3 very interesting ETFs to talk about. And a big shout out, guys. This was actually one of the topics from last night's stream, the SPMO. So it's very cool to see that we are going to cover it today. Like I said, I would. Going through here and looking at the trading and the volume, you can see even with the VOO, the AUM, very high, 786 billion, 12 billion within the SPMO, even 370 in the QQQ. So it is a smaller holding and also a very, a little bit of a smaller trade window that is within there. Now, holdings 100, like we had said, QQQ is at 102. So they run very systematically, but again, they are very different when it comes to a growth and when it comes to an ETF. VOO, we know 506 holdings in here, but then we get into the performance of both of these. And this is honestly where it gets kind of night and day difference. When you start looking at, they were kind of tracking, I mean, right along the side, same kind of vein over the last year, had again, that big drop, which we seen in April. That was the tariff rollout. That was everything that we seen. And then it was kind of off to the races after that. You can see that the 7% in just the crazy market rally we've had. Even looking here, your VOO is up 17%. So that is a super strong year. The QQQ is up 24, and the SPMO is up 33%, which again, in the last 12 months is kind of incredible to see a 33% growth. Then we get into kind of looking at this. And when, again, we start thinking of investing, we're looking at a 5-year plus time frame. So you can see even year to date here, we're at 12%. year to date 27 and then 15. So the SPMO is absolutely crushing it. 1 year at a 36, 3 year at a 32, then even going out 5 years. So again, when it comes to investing, we're looking at that 5-year time frame. 5-year time frame puts us at 21% growth with the SPMO. So a lot of people were questioning, could this be the one that you invest in when it comes to a growth of a portfolio? Looking at the 5-year, even looking at the 10-year that we have seen a crazy amount of growth out of that SPMO. And even on the downside, which again is kind of tried and true with these ETFs, when we see a market downpull or a market cycle, what does it look like? How far down it is? And of course, the SPMO performed even in a very down market, not as low as the VOO, not as low as the QQQ. So again, very interesting to see how this works. Then we get into the cost, very negligible. I mean, anytime you're at a 0.13, a 0.20, not really a huge difference within the expense ratio. And of course, the holdings we kind of talked about. But this is where it gets interesting, because when you compare both of these, and I think the big comparison here is really the SPMO to the QQQ, both of them very heavy, where the VOO is more of that foundational ETF that we see based on the market weighted cap. So overall, the two that I really want to focus on is the SPMO and the QQQ, because you'll notice right off the bat, NVIDIA. Now this, of course, is the largest company we have by market cap. NVIDIA, you can see 10.76, NVIDIA over in the QQQ. Then we have Microsoft. So if you look right here, guys, Microsoft growing at or holding at 8.44% of the portfolio. And you'll notice in the SPMO, we do not have Microsoft in here. So what that means is when you look at the QQQ, they are investing in these tech companies. They are investing in the NASDAQ 100. Microsoft might not be a company that was identified as a momentum company, or the price is increasing by certain guidelines. That is the reason why they are not listed here and why we do not see them here, meaning the growth rate over the next 1, 3, 5 years might not be falling into where the momentum fund is looking for. And the same falls to like an Apple, because you can see right down here, we do have Broadcom, we have Tesla, we have a couple of these companies that really do see a lot of momentum. Now, also remember with the QQQ is it does not include anything financial like a JP Morgan Chase right here, which is 5% of this ETF makeup. Meaning, again, we are seeing a really strong possibility for JP Morgan Chase to have that momentum and see a really big increase, which is the reason why you should buy and hold this ETF, where again, the QQQ completely excludes that ETF in its entirety. It is not going to be available. It is not going to be in there. And then, of course, when you look at a couple of other companies like Palantir and Costco's in there, Netflix is in there, a couple just the dynamic makeup. When you think of the SPMO holding 100 companies, the QQQ holding 100 companies, and it being a very different portfolio makeup, even though they are both very highly focused on tech. Now, again, it's interesting to see that some of these companies like your Microsoft and your Apple are not included in the SPMO. Then we kind of look at the breakdown. Again, thinking of the breakdown in here, you can see that the QQQ is a lot more into the electronic technology at 33%, SPMO 24%. Could even mean that we've seen a lot of growth out of the tech sector for a multitude of years. Could see some of those companies slow down a little bit. Technology services, again, QQQ all in at a 33% in here. SPMO, definitely a big pullback right there. Now, retail trade is interesting because they are holding out and have a lot more of that retail trade performance. We're again sitting at 16%. But look at finances. So here's the VOO and the SPMO, 20% in finances. And like we had said earlier, when it comes to the QQQ, they are not in finances at all. It excludes all of the financial companies, meaning they're planning and thinking about it logically. If you think of what is going on, let's say within the next 6 months, because we know that this does reallocate or rebalance every 6 months, knowing right now that the Federal Reserve more than likely is going to reduce rates, which is going to give a lot more favorable performance when it comes to financial institutions, when it comes to the financial sector itself. As soon as the Fed starts lowering those rates, we see a lot of people looking to borrow a lot more money, meaning that a majority of your mortgage mortgage companies, JP Morgan, even thinking of like Rocket Mortgage, a couple other places will see a lot more business, a lot more money coming in the door as soon as the Federal Reserve does start lowering those rates in the entirety, which could really drive the stock up for the financial companies, where again, in that QQQ, we're not going to see that growth because they are not included in there. And then kind of the breakdown, you can see very similar to both of these. Electronic technology in their finances, like we said earlier, it is 0 for the QQQ. Retail trade, again, a little bit similar, even over here having more health technology. But it's interesting to see because even looking at the P&E ratio, it seems like really a little bit of a better value when you look at the SPMO versus the QQQ. So how exactly could you play this performance? When we start thinking and looking at something of this nature, you could definitely put it into a portfolio. Kind of the pros and cons in here. The SPMO targets winners and targets companies that have a strong potential for growth. Historically has outperformed the S&P 500 over the last 10 years, has a very good fee structure, and great for growth-oriented investors like myself that want a little bit more risk out there. Now, of course, with this little bit higher volatility than we see with like a VOO, turnover could mean tax consequences. That is something you have to remember when it comes to this ETF specifically, and you might miss out on some of the companies like Microsoft or Apple because they're not considered their momentum stocks at the time of when we see a big run. If there's something, groundbreaking that Apple introduces or Microsoft introduces, chances are you could possibly miss out on some of that when it comes to this fund itself. So which of these 3 ETFs is best for you? If you want to set it and forget it, low cost, broad diversification, it is the VOO. If you want that higher, really potential, comfortable with the volatility, QQQ will work. But if you want the factor-based strategy that chases only the winners, the SPMO could boost your returns, but it will have those swings. And honestly, QQQ is going to have the exact same. So when we start thinking about all 3 of these, the VOO is the core, very similar allocation to the QQQ and also to the SPMO. So you could even break it where, let's say in your growth section of your portfolio, let's say it's roughly 40% of your portfolio. If you allocated 30% into the QQQ, 10% into the SPMO, you could have a little bit more diversification with a portfolio like that to include the financial industry with the SPMO and really poise it for growth. You can break this in a lot of different ways because at the end of the day, there's no one best ETF that really makes up a portfolio, really matching your goals, matching your risk that you do have in there. So let me know what you think, guys. What do you guys think about the SPMO? Would you add it to your portfolio? Do you already carry it? Do you have the stability of the VOO? Do you invest in the QQQ? Drop it in the comments if we're going in here. And of course, if you found this video helpful, definitely like the video, subscribe to the channel, hit the notification so you don't miss any of the ETF coverage and also the investing, personal finance, and of course, the financial education that we have here. So thank you guys for watching, and I'll catch you in the next one.